It's almost the end of the year and you're wondering what to do with your finances. How can I reduce my taxes? How can I shelter income? What can I do? What are my options as the year ends? Hopefully this video will help Canadians with some tax tips and answer questions I get almost every year. This video was recommended by a subscriber, so if you have a topic or idea that you'd like me to cover, please recommend it and I can probably squeeze it in. Please remember to thumbs up the video and subscribe to the channel. Starting off very basic, the first question I get: I didn't make any income, do I still need to file my taxes? The answer is yes. Income or no income, you still need to file your taxes. If you don't owe the government any tax, any money, there are no penalties for late filing, but you won't find out until you actually file your return. On the flip side, you could be leaving some government credits or refunds on the table if there's actually a refund owing to you. But again, you won't find out if you're getting any refund until you actually file your return. It's also easier to do your taxes within the year or within a year or two versus waiting 3, 4, 5 years and accumulating and doing those all at once. To summarize quickly, if you don't have a tax payable and you don't file, there's no penalty, but you should still file. If you do have a tax payable and you don't file your taxes, there is a penalty and it sucks. It's around 1% of the balance you owe per month. Long story short, just be an adult, file your taxes. The next question I get: I want to invest in my TFSA. When does my limit increase? Your limit on your TFSA increases January 1st. No matter when you opened your account or how much you put in previously, your limit will automatically go up. By 2021, right now the limit is $6,000 for every Canadian. Remember, you can have more than one TFSA account. It's not just one account. As long as the total sum of all your contributions don't exceed your personal limit, you can have as many accounts as you want. Third question I get: I don't have cash to invest in my TFSA. Can I transfer stocks that I already own? The answer is yes, you can transfer stocks. Every year I transfer $5,000 or $6,000 worth of stocks from my taxable account into my tax sheltered account, the TFSA. There are a few things to keep in mind when you're doing this. You're transferring your stocks at their market value, what they're worth now. You're not transferring them at your cost basis or what you paid for them. If you bought $6,000 worth of Apple shares maybe 10 years ago and now they're worth $20,000, you can't transfer those stocks into your TFSA. You will go over your limit, assuming you're only trying to transfer in $6,000. Be careful when you do this. Every time you transfer from a taxable account to a non-taxable account, there is a deemed disposition. But what does this mean? The government assumes you sold the asset and rebought it. They assume your taxable account sold it and your non-taxable account rebought it. They do this to see if you owe the government any money. If you have $5,000 worth of stock, but you paid $1,000 for them, if you transfer that from a taxable to a non-taxable, you have a $4,000 gain. The government wants their money. When you do this, you owe money on that stock, you owe taxes on that stock. So you owe the cash to the government, but you never actually sold it. So be careful. On the flip side, it gets kind of annoying. The government has stop loss rules. That means if you sell a stock at a loss and rebuy it within 30 days, the government denies that loss. They won't let you reduce your taxes by that amount. They do this because they know you're trying to game the system. Let's get even more annoying. There's no such thing as a stop gain rule. If you sell a stock for a gain and rebuy it within 30 days, you still owe the government money. Which brings me to my next point. Harvesting tax losses. This only works in taxable accounts. So no TFSA, no RRSP, RIF, RESP, RDSP. What is tax loss harvesting? If you have investments like stocks or ETFs that are worth less than what you paid for them, you're in a tax loss position. If you currently have massive capital gains from flipping a house or selling stocks at a gain, you can sell these investments that are at a loss to offset the taxes you'll owe. So your capital gains get slightly offset by your capital losses. You would only do this if you were planning on selling those investments anyway. If you have massive capital gains, try to make sure those capital losses are in the same year so you can offset your taxes. Don't do this if the assets or investments you're selling are part of your overall investment plan. If you plan on having those for years, 10, 20, 30 years, don't sell them for the tax loss now. Only sell them if you're planning on disposing of them anyway. A small reminder, capital losses can be carried back 3 years and can be carried forward indefinitely. Meaning, if you had capital gains last year and you paid tax, Then this year you have capital losses. You can go back, you can apply your capital losses to last year, offset the income, and reduce your tax. You might even get a slight refund. Looking forward, if you never had a capital gain before, but you have a capital loss this year, you can carry that loss forward until a year where you have a capital gain. You can offset them to reduce your tax burden. My next point, RRSP. You have 60 days after the year end to contribute to your RRSP of the previous year. So let's say January 1st comes around, you decide to deposit $1,000 into your RRSP. When filing your taxes, you have the choice whether to claim it as a reduction of your 2020 taxes or your 2021 taxes. But that only applies for the first 60 days of the year. So let's say March 5th comes around, you deposit $1,000, you can only apply that against your 2021 income, so plan carefully. Last item I want to talk about are bonuses. A lot of people get bonuses within the first 60 days of the year. Then they have the option of depositing that directly within their RSP and carry it back to last year if they want. But be careful with this. Only carry back your bonus to the prior year's RRSP if you think you're going to get a similar, if not higher bonus this year. Why am I being so specific about this? If you think about it, you're getting a bonus in 2021 and carrying it back to 2020. That means your income is high in 2021 because of that bonus, but you're not getting the RRSP deduction to offset your taxes. You've already carried it back to last year. Let me try to say it in a different way, in a different tone to clear any confusion. You get taxed in the year you get the cash. You can't move or defer the tax when you get the cash. But the government lets you move around your RRSP deduction. If you get a bonus in 2021 and you carry it back to last year's RRSP, try to make sure you're getting the same bonus in 2022 and carrying it back as well. Otherwise, there'll be a huge tax burden that you weren't expecting. Let me know if anything was unclear or if I've missed any points. I could do a follow-up video in the future. Thanks for watching and for all the support. I'm almost at my new goal of 5,000 subscribers. My initial goal was 1,000 subs for 2020, but I met that in May, and now my new goal is 5,000 and I'm very close. I'm thinking of taking a break from the financial advice for 2-3 videos just to break down some things of personal life, maybe do a breakdown of the studio and the equipment I use. I'm thinking of doing an Ask Me Anything for my 5,000 subscribers special where I answer your question with nothing off limits. I'll try to be as honest as I can without getting arrested, getting audited by the CRA, and worst of all, getting demonetized by YouTube. I'll release a video announcing the Ask Me Anything, and I'll give everyone 1 week to get all their questions in. Then I'll try to answer all the questions in one shot. Tune in for that one. Thanks, guys.